Okay. Hi, everyone. Welcome back. As usual, I'm here to share with you my views of the market, technically and fundamentals. So let's take a look at the calendar, start with that, and see what we can expect for today and the rest of the week. Okay. Give me a second. I will start by sharing the calendar and we will take a look at that. Yesterday was a holiday in half Europe, and we have pretty much non-relevant data released over the market. So we have a very slow-mo start for the week, right? But all of a sudden, this interest I had has become quite interesting, pretty mostly because we have the yen strengthening, right? There was not a real catalyst behind the break lower of the dollar Japanese yen, but the self strength of the Japanese currency, and that triggered a sell-off in the greenback that was later reinforced, but really positive data coming from the UK. I was betting that most of these inflation readings that belong to July will be a miss. But if you think about it, we had easing, we have the pound plummeting, so it's cheaper and there's more consumption. So it's quite logical to see inflation ticking higher, right? And this is telling that us that at least what the Bank of England is doing is starting to work, right? We are not going to put many hopes on this. When inflation is higher in the United Kingdom and the pound surge and the dollar extend its decline. The market is not on pause ahead of the release of um, U.S. inflation. I would expect that the market would have consolidated some, but we have the euro dollar flirting with 113 at the time being ahead of a release of inflation in America. So it seems that the market is quite determined to sell the greenback. Keep in mind that this Wednesday we will have the minutes from the U.S. Federal Reserve, the latest of their latest meeting, of course, and generally talking, we're expecting the Fed to remain on hold for longer, right? We have retail sales disappointing, producer price index is disappointing on Friday. Monday, we have a couple of minor releases in the US, and again, the numbers were missed. So overall, the market is seeing that the economic growth in the United States is slowing, not or maybe not being as stronger as it was, better said, right? And negative data, it's only delaying further the rate hike and therefore putting the greenback under strong selling pressure. So if the upcoming inflation readings in less than an hour came in below expected or even below previous months readers readings, sorry, the greenback could continue plummeting, right? Beyond that, and for the upcoming Asian sessions, we have employment in New Zealand that may affect a bit the Australian and the Canadian dollars, and inflation in Australia, which is a bit more relevant for me than the employment in New Zealand, because the Reserve Bank of Australia has been cutting rates in the wake of weaker inflation, and the market is expecting them to move further in cutting rates if inflation remains low. Okay. Employment for the United Kingdom also Wednesday morning will be quite interesting because again we are talking about June data. It's we are starting to see post-Brexit figures, right? But I would expect this one not to be as good as we had today in inflation. I would expect a miss in year or a decline in the number of employment and the unemployment rate because I would expect them. I'm suspecting, right, that companies didn't hire as much as they used ahead of a have Brexit vote, right? We're all in wait and see mode, and the United Kingdom most. As I said, Fed meetings, minutes will be released also tomorrow. Quite interesting, of course. Market will be looking for clues about the next rate hike if we have an upcoming rate hike. Uh, the hawkish stance, I mean, right? Something really positive coming from them, which seems unlikely. Um, then the market will suspect the rate hike will come forward and therefore favor the greenback. If it not, the inverse scenario will be seen. Thursday morning, Australian employment figures will be the most relevant data during that Asian session. Uh, that the market is keeping an eye on Aussie. I said this many times, and I still believe it. The Aussie is among the strongest currencies across the board. The rate differential, even despite the Reserve Bank of Australia has cut rate, is huge. We are talking of negative rates or 0 point something rates all over the world. But in Australia, we're always at 1.5%. So at the end of the day, it's still a good deal to get to buy the Aussie, right? So that's why we are trading not from the year high. Anyway, retail sales in the UK for me would be a bit more relevant than the European inflation. You know, uh, retail sales will be July numbers once again post Brexit, and I could expect this to be quite disappointment. Guys, I believe that this will show the real scenario post Brexit. And inflation in the euro area, well, we're expecting a sharp decline in July. Honestly, that will keep Europe in deflationary levels. That will force the central bank to act against lower inflation. And the fact is that the central bank, the European Central Bank, has not much more to do about the negative inflation. So I guess that a negative number in year worse than expected, or around what we're expecting, will uh, put in trouble at euro bulls, right? And it's not expecting much gains from the common currency if inflation is a miss. Still, as I was saying, I don't believe that this has been a great market mover and will probably will remain so. Okay. The week will end with inflation in Canada, right? Expected pretty much unchanged, but at nice, healthy levels. So um, that could favor further Canadian dollar gains, particularly as the currency is gaining big with the latest recovery in oil prices. Okay. Anyway, not much from there. Let me change to charts and see there what we have. Quite more interesting than calendar. Uh, Here we are with the euro dollar, as I was saying. The pair is flirting with 113. I was watching it trading at its highest ever since the Brexit, but it's not yet at pre-vote levels. But indeed, it's approaching a major resistance area, which is 1416, where the pair has stalled rallies. Let us take a look at the chart. 1416, it's around here. Okay, this is a weekly chart. We have been capped by that level since early 2015, with a couple of spikes above it being unsustainable. So I do believe that if we have further misses in the US economy, we can reach up to that level. To be honest, I'm not seeing gains beyond that level because, as I was saying earlier, there's not much supporting uh, an euro rally, right? Euro strength. One thing is dollar weakness, but the other is the euro being strong enough to rally beyond that level. To be honest, the pair has been pretty much range bound from the past year and a half over that with no clear trend. You can see it in the weekly chart. The tightest range has been 800, 1460, 600 pips, right? With a few exceptions to that range being quickly reverted. Any move beyond or below 800, take a look, was short lasting, right? So, and the same happened with the two we had above 1416. So, I could consider rather selling around that level if we get up there than hoping on a break and buy. Anyway, what I was watching today is that we had enough upward momentum to break above the 100 simple moving average in the daily chart. Also, the first time above it since the Brexit plunge. So overall, the technical stance for the euro is bullish for these days and the upcoming days. Okay, particularly if we can settle above 13.10. I would expect the rally to extend then up to 13.17, 14, and above that the mentioned 14.60 level, which I would take profits quickly out of the pair if we reach that level, and I'm buyer, right? Anyway, and the immediate support for me comes at 12.45, which is yesterday's high, right? We have yesterday has there 35 last week. So in between 35 and 45, we have our immediate support for today. Pullbacks down to that level, right, will be corrective, but if we break below 35, then the risk turns towards downside. And I would expect the pair to move back to the 1160 region. Honestly, not seeing from where the dollar can get the strength to break towards this level or below, but well, it can happen, right? So I'm considering the supports for the upcoming days, not seeing it falling. But below that 1160, the next support is 11120. Okay, the pound had a nice upward corrective movement today. Okay, but it paired gains around 130, 29.93, 29.95. Indeed, market is not really willing to take the pound higher, and I do believe that this is more due to profit taking than real intentions of pushing in the pair higher. 130, of course, it's critical. We have this previous spike up to 30, 34. So I would say that if somehow the pair breaks above this level during the upcoming days, it can go up to 131 region, where I do see the next batch of selling interest, right? Honestly, not seeing a recovery beyond this unless we have really I mean, fundamental readings. And in that case, if the rally extends, I still believe that selling interest will be waiting at higher levels, being the line in the sand for me. This 33 region, right? The strong Fibonacci resistance, take a look. This is the post-Brexit plummet. This is the 23.6% retracement of that level. So up to that level, the movement will be corrective and it's possible, but further gains beyond that are not yet seen. Okay, in the shorter term, of course, we have an immediate support around 29.50, 29.10. Okay, and then of course the lows we had yesterday around 28.60, ahead of the 28 region, the bottom of the Brexit slide, right? And about the OC, as I was saying, take a look. We are again back to past week highs. The movement is clearly bullish with corrective movements in the way, being quite logical, moderate, but this is the year high at 78.30, and we are what? Barely 50 pips away from the level. So, as I was saying, I do expect the pair to reach that level. I also believe that the Reserve Bank of Australia won't be really comfortable if we also reach that region, okay? Uh, but I don't see what they can do at this point but cut rate further and probably with a more aggressive stance, cutting 50 basis points, something I'm not yet seeing. You know, Governor Glenn Stevens had ended his mandate. We have another Reserve Bank of Australia governor coming in September, and still Okay, sorry, had a little internet problem. Here we are again. Okay, as here we are, as I was saying, the Aussie is bullish, and in the short term, we have an immediate support around 77.20. The next one coming here, 76.80, right? 70 region, and 76 is for me the line in the sun during this week at least to downside, right? I'm not seeing the pair breaking below this level and will probably extend towards the high on a break above this 77.75 we posted yesterday, okay? But overall bullish Aussie. And for the Japanese yen, well, what can I say? We are breaking through 100. This monthly chart, right? And this is the economics rally, as I call it, right? 100.65 is 66 to be exact. It's the 50% retracement of that rally. Okay, here you have it. The pairs style there monthly time basis multiple times, but it's now breaking above it. Take a look. We pair there. We broke. We weekly charts. You will see. Okay, how many times the price stop around that level in the last few months. Here we are. It's a major support. We are breaking through it. I would expect this to be quite bearish for the dollar Japanese yen. The post-Brexit low around 98.90. No, sorry, 90. Yeah, 98.90. No, yeah, 100 pips below the current level. That's the first target. 97.30 comes next. And if we break below that, 95 is the probable target. I'm not seeing much of a bullish case in here. I do believe that any attempt to advance will be seen as a selling opportunity now around this 160 region. And the next one would be 101, okay? And 101.40. Those are the resistance for this week. Not seeing the pair going much farther than 102, okay? Um, gold is also being quite interesting because it has entered a consolidated phase, right? But it's really willing to go higher. And as I've said multiple times, any kind of rally in gold or of course retracement will depend on the Fed. If Fed raises rates, the gold prices will plummet. But with negative data coming from the US, poor inflation today, right? Those chances will be delayed, and therefore gold will probably rally farther. Okay, this 1375 is the high for the year, right? So that is a level and a probable bullish target we are aiming to during the upcoming days if the US data continues to disappoint. 1357, 1366, in fact, are the next resistance level for today. Above that level that we can go up to there, and a break above this will take us towards 14. We have in the 1330 region, right, quite interesting support of Fibonacci 1 plus multiple intraday highs and lows since early July. So I would say that around that level, the market is full of buying orders, and we need to take 25 at least to trigger stops and see it falling back. Speculative interest is bullish in gold and will probably remain there. Another one that posed a sharp comeback is oil. Honestly, there's little base for this rally, at least from a macro perspective, because the US is producing more. The International Energy Agency says that output will grow, uh, and that trigger fears of a glut. Sorry, but there we are with the prayer recovering sharply after Saudi Arabia said that they may have an informal meeting to talk about what to do with this oversupply market. You know, they are meeting by the end of September, right? And it's an informal talk, an informal meeting. they had a formal meeting to discuss the situation of market in April, and they failed to get to an agreement. So they usually fail to make agreements. So there's little things supporting the fact that they will actually act, right? That they would cut off production to fuel oil prices. But those hopes seem to be enough to push the commodity higher. And if you take a look at the charts, it's clearly bullish right now with 45 being the immediate support. So there's still room to go up to these highs, right, in the 4680 region. And above that level, we have the next resistance at 4740, followed by that high in the 4820 region, right? As I was saying, 45 is the immediate support, 4440 comes next, and 4380 is the last one for the upcoming couple of days, right? I'm laughing because I sometimes you don't have to reason behind the movement, but if you take a look at charts, you rather believe charts that are saying it will rally rather than any fundamental that's telling me it's going down. Of course, it's quite much better when fundamentals and technicals are aligned, right? In that case, like for example, in dollar Japanese yen, where everything is telling us that it will fall. It's better to go with those pairs than with those that fundamental or assets for the case, or for those where fundamentals are against what technical readings are saying. Anyway, in that case, I rather follow technicals. Anyway, that's it for today. Okay, guys. Thank you for sharing these moments with me, and see you back soon. Okay. Thank you, and bye bye.